The world is witnessing a significant shift in global trade dynamics. Leaders from various nations are openly opposing Donald Trump's economic policies. The question arises, is Trump truly strengthening the U.S. economy or pushing it into an unnecessary trade war? As Trump imposes heavy tariffs on allied nations, countries like Canada, Europe, and the UK are no longer staying silent. They are publicly speaking out against these measures. The outrage is palpable. But what exactly is driving this backlash? If these nations retaliate, how much damage could it inflict on the U.S. economy? Let's explore this unfolding situation. Canada, for instance, is striking back hard. Prime Minister Justin Trudeau has made it clear that Canada will not bow down to Trump's tariffs. If the U.S. imposes tariffs, Canada will retaliate immediately. This isn't just rhetoric. The Canadian government is leading a nationwide boycott of American goods and travel. Imagine walking into supermarkets, airports, and shopping malls in Canada. People are deliberately avoiding anything made in the U.S. Tesla, one of America's most iconic brands, is facing a crisis in Canada. The country is one of Tesla's largest international markets in North America. If Canada imposes a 100% tariff on Tesla vehicles, prices could double. This would crush consumer demand. The impact would be severe. Plummeting sales, potential factory slowdowns in the U.S., and job cuts in Tesla's production lines are all on the table. U.S. agriculture is also under threat. Canada is the second largest export market for U.S. agricultural products. This includes wheat, dairy, and beef. If Canada imposes tariffs or restricts imports, billions of dollars in revenue could be lost. Thousands of American farmers might face bankruptcy. This would put immense pressure on the Trump administration. Europe is also preparing to hit back. French President Emmanuel Macron has been vocal in his criticism of Trump. He has mocked Trump's "drill baby drill" mantra, contrasting it with Europe's focus on renewable energy. Tesla risks losing the European market, which accounts for nearly 25% of its global sales. If Europe imposes steep tariffs, Tesla's pricing will skyrocket. European consumers might turn to Volkswagen, Renault, and BMW's electric vehicles instead. The outcome? A collapse in Tesla's European sales, plummeting stock prices, and thousands of U.S. manufacturing jobs at risk. Big tech is also facing a European backlash. The EU is considering heavy tariffs on companies like Google, Apple, and Amazon. This could result in massive profit losses. Stock market instability and damage to the U.S. economy are likely consequences. American companies might shut down offices in Europe, leading to major job losses. The UK has also joined the chorus of criticism. Former Prime Minister Boris Johnson mocked Trump's controversial immigration policies. He made a scathing remark aimed directly at Trump's destabilizing rhetoric. The question now is the U.S. isolating itself? With world leaders pushing back, how will Trump respond? Will he back down or double down on his trade war threats? If this trade war escalates, the U.S. could lose hundreds of billions in exports. Thousands of American jobs could be at risk. Is Trump really protecting the U.S. economy, or is he driving the country into a financial crisis? Canada's proposed 100% tariff on Tesla is a surprising move. It's not just a response to Trump's tariffs. It could completely change the North American automotive industry. Let's analyze the numbers and potential consequences. Canada and the U.S. have maintained a close trade relationship for years. They exchange $50 billion in cars and metals like aluminum and steel annually. However, under Trump's protectionist policies, Canada finds itself in a tough position. A Canadian politician recently proposed imposing 100% tariffs on Tesla cars. This could shake the North American auto industry and have global repercussions. Why Tesla? It's not just a leading electric car brand in the U.S. It's a symbol of innovation in the global automotive industry. Tesla holds about 70% of the electric vehicle market in the U.S. If Canada imposes a 100% tariff, the price of each car could rise by $5,000 or more. Such high prices would severely impact Tesla's sales in Canada. Consumers would have to pay more, reducing demand and decreasing Tesla's competitiveness. This move could lead to many negative consequences. Tesla investors would face stock value declines. Revenue and profits would be impacted. Expansion and investment strategies in North America would become complicated. Confidence in Tesla's long-term sustainability in the electric vehicle industry could be undermined. This trade war won't just disrupt the Canadian auto market. It could ripple out to the global scale. The electric vehicle industry, which has been growing rapidly, may slow down. Other automakers and component manufacturers would face rising production and consumption costs. This could hinder the growth of electric vehicles. Delays in green energy transition plans could occur. Global efforts to reduce emissions and protect the environment would be directly affected. Tesla is in the eye of the storm. The economic consequences of this trade war are significant. A 100% tariff on Tesla would have a widespread impact on the U.S. auto industry. The effects would spread throughout the North American economy. Tesla plans to sell over 1 million cars globally this year. Over 50,000 units are sold in Canada annually. If Canada imposes a 100% tariff, the price of Tesla cars in Canada could increase by 50%. A Tesla Model 3, currently priced at about $40,000, would cost consumers up to $40,000, would cost consumers up to $80,000. This is far beyond what most consumers can afford. The impact won't stop at Tesla. The North American auto industry, including giants like General Motors, Ford, and Chrysler, would face major disruptions. Over 2 million cars are produced annually in Canada and exported to the US. A tariff crisis would shut down factories. Hundreds of thousands of workers could lose their jobs. The Canadian auto industry is worth about $50 billion annually. If this trade war isn't resolved, significant damage would occur. Not just to Canada, but to the entire North American economy. Canada's response to Trump's trade policy has been shocking. The US didn't see it coming. US-Canada trade is worth over $800 billion annually. Any disruption could send shockwaves through the economy. Instead of backing down, Canada hit back hard. Retaliatory tariffs were imposed. New markets were expanded. Ties with the European Union were strengthened. This move protects Canada's economic interests. But why did Canada's response shock the US? How will this impact the global economy? Trump's policies have sparked a trade war with Canada. Over the past month, the Trump administration has doubled down on aggressive trade policies. Heavy tariffs have been slapped on imports from Canada and the European Union. The goal was to protect American industries. Instead, it triggered an intense backlash. Experts warned that these policies could disrupt vital supply chains. Fuel and consumer prices could rise. American businesses and consumers would be hurt. The impact is already being felt. Higher fuel prices, increased production costs, and a growing risk of job losses are evident. This could spiral into a dangerous cycle of economic retaliation between major economies. Why did the Trump administration take this gamble? Did they underestimate Canada's response? Canada didn't back down. Prime Minister Justin Trudeau responded swiftly. He called the US tariffs completely unjustified. Retaliatory tariffs were imposed on US goods. Steel, aluminum, and key agricultural products like beef, dairy, and fresh produce were targeted. But that was just the beginning. Canada moved aggressively to diversify its trade partnerships. New agreements were signed with Europe and Asian nations like Indonesia and Ecuador. This strategy reduces Canada's dependence on the US market. It strengthens Canada's economy. It also puts the US in a difficult position. Losing a key trade partner right at its doorstep is a significant blow. Canada and the EU have formed a strategic minerals alliance. This is a challenge to China and beyond trade. Lithium, cobalt, and nickel are essential materials for electric vehicle batteries, renewable energy, and high-tech industries. China currently dominates this market, controlling over 90% of global supply. Canada and the EU are building an independent supply chain. This reduces reliance on Beijing. It strengthens economic security. It also sends a clear warning to the US without a smart trade strategy. Washington could be left behind in the race for the energy industry of the future. Trump's foreign policy is also a concern for Europe. European leaders are increasingly worried about his unpredictable decisions. After the US held secret negotiations with Russia over Ukraine, many nations felt sidelined. This has pushed the EU to strengthen its independent defense strategy. Reliance on NATO, led by the US, is being reduced. France has organized high-level meetings to expand military cooperation. Defense supply chains are being strengthened. Defense spending is being increased. Europe and Canada are shaping a new strategic landscape, one that is no longer dependent on Washington's decisions. The trade standoff between the US and Canada has extended beyond typical political issues. Canada's retaliatory actions are immediately affecting the US farming sector. This could mark the beginning of a broader crisis in global agriculture. The situation began escalating when the US imposed a 25% tariff on various Canadian goods. Agricultural products like grains, meat, and dairy were targeted. Canada didn't hold back. It retaliated by slapping tariffs on US goods like corn, soybeans, and beef. Export costs for US farmers have increased. Finding alternative markets has become difficult. The dairy industry is suffering significant losses. US dairy farmers have long relied on Canada as a crucial trading partner. The new tariffs have made dairy exports to Canada prohibitively expensive. Demand has reduced. Prices have been driven down. Many dairy farms in the US are facing severe financial crises. Grains and soybeans are also affected. Canada has been one of the largest export markets for corn and soybean farmers. Retaliatory tariffs have caused prices to plummet. Farmers are stuck with unsold crops. Massive financial losses are being incurred. The livestock industry is feeling the sting as well. The cost of exporting meat to Canada has skyrocketed. Demand has driven prices into freefall. Export costs are rising. Many livestock producers are scrambling to find new markets. This crisis isn't just about immediate losses for farmers. It's going to have far-reaching consequences for the economy. Local, national, and even global levels will be impacted. The global agricultural market could see a significant gap. Countries like China, Mexico, and the EU might seize this opportunity to increase exports. Where the US and Canada are losing ground, others will gain. In the face of market uncertainty, many farmers are turning to precision agriculture. This improves efficiency. However, these technologies require significant investment. The financial pressure from tariffs is making it difficult for farmers to invest. The agricultural landscape in both the US and Canada could be reshaped. Small family-owned farms may be forced to sell to larger corporate farms. Farm consolidation could accelerate. Beyond financial hardships, farmers are facing significant emotional distress. The mental health of farmers is becoming an increasingly critical issue. This trade war between the US and Canada may be a major setback for the US farming industry. But it could also represent a turning point in global agricultural trade. The immediate impacts are severe. However, there are potential opportunities for farmers and countries to adapt to new markets. Innovative solutions will be key. The future of agriculture depends on how these sectors respond to the rapidly changing trade landscape. The US is heavily dependent on Canadian energy. What would happen if that energy door were closed? Imagine skyrocketing oil prices, factory shutdowns, and sky-high energy bills. This isn't a distant scenario. It could happen if Canada decides to cut energy supplies to the US. Let's dive into the potential devastating impacts. The US is the largest economy in the world. But one of the key factors keeping it stable is its reliance on energy imports from Canada. Oil, natural gas, hydroelectric power, and uranium are all supplied by Canada. This relationship is crucial. Canada is the largest oil supplier to the US. It accounts for about 60% of US oil imports. Natural gas from Canada heats the northern regions and powers US industry. Hydroelectric power from areas like Quebec provides cheap electricity. It plays a major role in the US's renewable energy strategy. Uranium from Canada is essential for nuclear power plants. The US is heavily reliant on energy from Canada. This relationship supports the economy. It ensures energy security for the US, but if this supply is interrupted, the impact could be severe. What happens if Canada stops supplying energy to the US? The consequences would be huge. Energy prices in the US would soar. The cost of living and production would rise. Energy-intensive industries like steel and chemical production would face a crisis. High energy prices would force factories to reduce output or shut down. The US would struggle to find stable and affordable energy sources. Shortages would occur. Industries would be under pressure. Canada might redirect its energy exports to other markets like China or Europe. But this comes with significant infrastructure and cost challenges. A quick transition would be impossible. If Canada cuts its energy supply, energy prices will rise. Industries will suffer. Shortages will occur. The energy relationship between the US and Canada is crucial. Any disruption could lead to major consequences. This is an issue that both countries need to carefully consider. The far-reaching effects on the economy and regional stability are significant.